Hello guys, welcome to my channel again. In this video, we are going to do top-down analysis because it's been a while we did something on this channel. Um, the reason is because I don't see much move in the market, or let me say I don't see much changes in the market that warrant day-to-day analysis. Due to also some schedule, the busyness of my schedule. And pardon me, I'm having kata, so in case if I'm a bit irritating you guys, so just help me to manage it. So um we'll go straight to the point without wasting time. This video might be a little bit long, and then because I want us to touch some major pairs here, so that we know what the market is doing, is going to we'll be expecting in the coming weeks or coming months. So as you all know, we only need to start from DXY. So if you are looking at it, we don't need to go to higher time frame or DXY because more higher time frame than daily. You can see this daily because DXY has been giving us the sign that we are anticipating for a while. So if you look at it, before I go, this is just the concept. The concept is us looking for the liquidity taken out. Then let's say the market is in uptrend. This is the last low created. We want the market to take out this low, mitigate something here, then do its thing. So this is the move we want to capitalize on, so not this small one. So and if the process repeats itself again, market mitigate this low, then we want to continue to the upside. So and that's how the process. So the last pullback has our liquidity point until market create another one, then we can now use this. Then. So that's just the concept. It's not that difficult. So that's what I've been teaching on this channel. So I decided to stick to that so that people on this channel will not get confused. So and as you can see, what we are having on DXY is just the same process. Markets sweep this high, break this low, this high turn to our sorry, let me use red. This high turn to our high point, then this break of structure turn to our low point. So we're expecting this high to be protected, but market did well, market close above it. So in case, let me widen it up. So a market close above it, and then after market close above it, that's when we can establish our change of character here. And after change of character, what we do is this low is where we want to trade. We want to trade below this level because if you look at it, this is the move and market created another one like this. So we are not trading anything above this low. So because this serves as our liquidity point. So after we mark out this low, and this is the only other block that is available for us to trade from. So and as you can see, why is this other block valid? Because we have a value gap here. And as you can see, what market did nicely, markets mitigate um, this level and give us nice double bottom on daily time frame, and you see the momentum to the upside. Remember I said this is what we want to be. Remember I said this move is what we want to be taking, not this small one, not this small one. This major move is what our interest is all about. So looking forward, you can see after break of structure here, then this low must be protected because it's our deepest pullback that the market did after we had change of character. And you can see, so when market was here, I knew two things is likely going to happen because this is the major low that the market did. I knew that this move to the upside, if market break above, then market will come back for this major low. Then we'll be attempting to buy from this level or from this level. But as you can see, market just induce people to do as if you want to buy. Then you see how massive the pullback was, how the speed and the volume that the market used to drop on this one. So anybody can be trapped here if you have been buying here, thinking maybe this is a support and resistance of a thing. Sometimes it work, but you will likely be trapped most of the time. So you can see you will buy here. If you are not lucky putting your trade in stop loss, you will be stopped out and you end up losing some money after market have already induced you. So since I knew that this low is where the market is actually going to target, and after I mark this low, where is the only place that I have other block? You can see this is the only other block I had. Why? Because this level serve as my this is our fair value gap. So my other block has its own criteria. If it doesn't have that criteria, it's not valued according to me. So So, and remember, as I said, I'm not teaching anybody how to trade here. I'm only explaining how I trade. And if it makes sense to you, you can learn from it. So because trading is wide, there is no one way to trading. So you just need to figure out what works for you. So going forward, I'm expecting more collapse. It's very, very easy for you to see a kind of demand here that is trying to buy this market to the upside. Don't fall for it. This is just an SMT. Market is likely still going to drop. So that's just it. So this is where I'll be waiting for market to do its thing. Then before I start looking for buy on DXY. So, and if you're using this analysis, you can use this analysis to understand what Euro USD is likely going to be doing based on this, because if you flip this chart upside down, you will see that it's almost the same thing. So, and when DXY is buying, you should be rest assured that the other major pair will be selling. The euro, any pairs that pairs USD, they will likely to be selling, because USD has its own buy momentum. So that's it for DXY. So let's go to his brothers, Euro USD. Let me use this one. That okay. So Euro USD, you can see, I think I can briefly analyze this Euro USD. Looking at daily time frame, these are obvious break of structure that Euro USD has done. And where is the deepest pullback? This pullback is what make it uh, what pushed this market to this upside. Why is this pullback confirmed as break of structure like this? If you want to check it, why is it confirmed as break of structure? If you look behind, you will see this is the break of structure that the market did. Liquidity taking, sorry, this is not liquidity. This is the liquidity taking. Market reacted to the upside, protect this low. Market came back to this level again, then bounced to the upside after using all this as a liquidity. So we are expecting this level to be protected, and market did what? Market invalidated it. So if you flip this chart, you will see that it's like you are trading DXY. So after we add this level, what does market need to do? We have to wait for market to come back to this last pullback that it did. And this is our other block. You can see market respected the other block gently, and market break below this level. So now we have break of structure. This is going to serve as our high in daily time frame, Euro USD. So now, once we have this situation, what I did was, where is my inducement? As I said, I don't trade without inducement taken out, because inducements for me is the liquidity that attract the market, and is the fuel that move the market. So is you can't find the inducement, be rest assured that you are going to be part of the liquidity. So, and after I mark my inducements, I look for my other block, which is this. I was able to spot this. This is the only other block that I have here that I have what? That I have fair value gap. If you can look closely, this is the gap for me. So you can see, so that's why this other block is valid for me. And I'm expecting the market by all means, at least to first take out this inducement. You can sweep it, then collapse, or you can sweep it and still go back to this other block. The scenario here is this market can easily go up like this, sweep this, collapse, or do this, mitigate this level and start giving us sell momentum again. Or markets will mitigate this level, fail this level, sweep this major high. Is only on sweep. If it happens on close candle here, then automatically we have change of character. But as it is, if we add sweep here, then we can start looking for sell momentum to the downside, because all the liquidity here has been taken. So that's just how to perceive it. And trading is a game of probability. You have to prepare your mind for whichever one. So these are the scenarios that is likely going to happen before we see any sell momentum on Euro USD. So first one is inducement sweep, which is this level. If you have a sweep here, though is low probability, but it happens sometimes too. And if the market close above here, be rest assured that the market is likely going to mitigate this other block or take in this fair value gap. So, and if that happens, I'll be looking for sell. Immediately market mitigate this level. I don't take a dismiss sweep, but I take this. So immediately the market gets to this level, I will be looking for my 4 hours or 1 hour sell entry model. So that's it for this video. And if this one maybe fail, then I'll be waiting for this. I know whichever one will happen, or we had complete change of character. So that's it for Euro USD going forward. We don't need to. And then and counter trade, not in this video. I'm not going to explain how I was able to make money off this counter trade, but it's not really my A plus kind of setup. So I just traded it based on my experience and my intuition. But I don't want to include it because when you watch video, you like to try everything that was perceived to be working in the content. So just let's leave it to the basis, and once you master the basis, then you can play stunts with the rest. So let's go to GDP USD. GBP USD. GBP USD. So GBP USD is also not direct. So I will just explain what I was looking for and what how I was perceiving the market. So GBP USD gave us something like this. First attempt, okay, let's see. GBP USD gave us, I think, break out this level. This level seems to be okay. Not this level. This is the level. So this is the level that we had. Based on the plan, you can see GBP USD took out this low because this is the structure, break of structure, inducement. Then GBP USD took out this low. So we're expecting this high to be protected, yes. So we're expecting this high to be protected because this is the highest pullback that the market did, and this is the lowest where it broke the structure, So, and at the end of the day, you can see what GDP USD did here. We had change of character. All these are just internal structure. So if you can just understand these things, it's just very, very straightforward and direct. And this is not a new concept. This is just the way algorithm of this market works most of the time. I've checked it to 80s to 70s on some of the charts. So and I see that this the closest way I can understand the market. This way, this kind of concept, inducement, liquidity, and so on. So if you can read it this way, then you can see this GDP USD inducement and this low must be protected, which is still being protected. And we are expecting the market to come up here to come and give us break of structure. So with this our trading range in GDP USD, and you can see after market take out the inducement, there is no other block here. The one we have here do not have a value gap and it's not valid. So this to me, I was expecting the market to keep bounce up, break structure, then do its thing, but you can see market went back, got to this level, got stuck, and so on. It was only doing what? It was only doing internal structure. These are internal structure, or let me call it consolidation. It wasn't clear. So what am I expecting on GDP USD? I don't expect much. I want the market to either go up. If the market can go up, fine. Then we'll have a complete structure. Or if the market don't want to go up, maybe markets will just push up a little bit, then it will collapse. Then we have change of character. That's exactly what I'm expecting on this on Euro USD. If this high can be protected internally, then market push up a little bit, then collapse, then that would be a good directional bias for me. But for now, I prefer to stay with Euro USD because it's more clearer, it's more direct than GDP USD. So GDP USD is I can't really say the directional bias, but based on the structure, we're expecting the market to go up. But based on what I'm seeing here, it's internal structure and it's becoming noisy for me. So I don't need to force trade. So let's go to AUD USD. So AUD USD is still the same thing. There is no way to no need to start stressing yourself. Just look at what the market is doing currently. This daily time frame is kind of higher time frame on its own. So AUD USD, let's see what the market has been doing, and from there we can decide whatever things we are expecting from the market. If I'm to mark it, this is the last break of structure that the AUD USD did for me. So if I'm to Sorry. So this is the last structure that EUD did for me. And why this is the inducement and market mitigates all this fair value gap and bounce to the upside. So it means that this low must be protected. And after that, we have to this is the high that the market created. Why? We can't mark this high until market came back from inducement. This is the major inducement. No, but these are both inducement. So, but for the sake of this course, I will use the last pullback as I used to preach. So this is it. So you can see, sorry guys. So after we mark this, market take out this inducement, it has confirmed that this is the high. That's when you can start marking your high. So, and where is your inducement? Where is your liquidity point? If you look at it, I don't know, maybe there is a gap here, but let's say this is our decisional POI. If it's not mitigated, I think it has. No, it wasn't. So based on this chart, it was not. So, and on this one, this is our extreme, and you can see, so this one has been invalidated. We can remove it, and you can see, and why is this valid? Because there is a fair value gap here in between. So as you can see, immediately market got to this level, market start reacting. So all I need to do based on my trading plan is to go to my lower time frame and do what, and start buying to this upside, because uh, market has fulfilled my higher time frame probability. So all I need to do is to just probably go to 4H. I had a trade on this setup, so, and I will explain why and how. So you can see in 4H, I can systematically use this high. This is the last high market created. Market took out this low and create another low. That's why you don't need to be very, you don't need to be aggressive when you are entering the trade. You just need to allow the market to do change of character, allow the market to come down and give you a proper move to the upside before you look for entry, because this POI is still valid. The market can still trade to the lowest part of this POI. So as you can see, market took out this level, and then we have this break of structure, not break, but market took out this high. Then market did a pullback and start coiling up. So I back my inducement. I knew this is an EDPOI for me because it swept the previous candle, and this is the entry. You put your stop loss below this level, then you target maybe 1 to 2 or 1 to 2.5, or the concept is just take it systematically as the market is giving you something. The main thing is to take this like this to the break of structure, but if I have to do that, my stop loss have to be here. Then I'll have to target 1 to 3 because it's not too far from my new break of structure. So this is going to be the ideal one if you want to be aggressive, but if you don't want to put your stop loss below this level. And so this is a nice trade. You get this one, but I didn't take this trade because I was looking at something better. I think I want the market to give me the intense before I join this move. And if you are to look at it, this is the break of structure. You can see this is the break of structure. This is the first attempt, but it was confirmed here. So this break of structure was confirmed after the market closed above it. So it means that we had our low here. So, and you can see market just coil up. This confirm as our inducement, and you see market came back to this low systematically. So immediately I saw that, that was when I joined this trade, and I put my stop loss here. And what do I target? I only target about 1 to 2. So this is the current situation of this trade. If I'm to show you on my journal, you can see, let me load my journal for you. No, this is not. If I'm to show you on my journal, you can see, if I'm to show you on my journal, you can see this is the trade I took. I hope my journal is showing here. I'll show you the live chart, but I still want to show you on my journal. So this is the trade I took, and this is the trade. It's almost as it's 1 to 2. So this is how I took the trade. You can see. So that's it for Euro USD. So this is the current situation. I'm expecting the market to hit my TP because it's almost there. So that's it. And if you still want to see, look at this. This is the trade running. I think my network stuck. Okay, this is the trade running here. Where's Euro USD? Okay, this is the trade running here. You can see this is the trade. So this is where I got into the trade. I'm already preparing for another entry on that trade. So that's what I have on Euro USD, AUD USD. Sorry, pardon me for that. So this is the scenario. So what are we looking for? Looking for going forward. Since this structure is still intact, we had a break of structure already. And if the market break up like this, uh, if the market break up like this low will be a liquidity point, and if market come back below this point, I'll be interested in buying again to the upside. So going forward, that's what I'll be expecting from Euro USD. If the market push up, this will be my liquidity point. I want the market to do this, come back, then I'll continue buying. So that's what I'll be doing on the AUD USD. So The last setup I had was CAD JPY. I still had another setup running, but CAD JPY, let's look at it first. Okay, not this one, but let me explain. It was before that drop happens. Let me explain my thought process on CAD JPY. Let me remove all this drawing. So this daily time frame of CAD JPY, what was I looking at? I was looking at this as a break of structure. I was looking at that as a break of structure, and then I was looking at this level as my uh the inducement here. So market push back. This level was supposed to be the inducement before, but market was unable to take it out, and market push back has broke above here. So this break of structure is not valid because no inducement here. So all I know was this low is likely to be a liquidity point. Then maybe market will now mitigate this other block. So you can see immediately market mitigated this other block. Now I can confirm that we are going up. So I wanted the market to come back, take out this high. So now that we had that, and I saw the way the market was moving from here to here, then I decided this is where I actually got my trade from. So let's go to 4 hours time frame. Let's go to 4H before the drop happens. So in 4H, when market mitigate this level, this is like a change of character after this low was taken. No inducement, the market keep pushing. So what I saw was, okay, what is going to happen here? I can see that market has created inducement from this high. And then I noticed we had a order block here, which systematically serves as my decisional order block. And when I was looking at this, I knew the market is giving me the kind of formation that I wanted. So I checked it at 1 hour, and I look at what was 1 hour was doing. I discovered that 1 hour was also having the same thing, but in terms of 1 hour, we've already have a 1 hour kind of structure complete here. So like this, and so this is the complete structure. I'm expecting this low to be protected. So that gave me confidence that this level serve as 1 hour extreme order block, and it also serve as 4 hours decisional order block. So that gave me confidence to enter this trade like this. I took this trade like this, and I target 1 to 3. So this was a very nice trade for me. And immediately that happens, I just ignored the setup because it wasn't giving me the clear formation again. So and after that, break of structure happened here. You can see we had break of structure here. So and there is no liquidity point for me except this level. So I knew that all this was just a game. I'm not interested in buying this shit to the upside. So I just ignored it, and I was watching the market. So and suddenly the flash happened. So whichever way, I was lucky to have my win trade before the market do its things. So and the other pair, the last pair we're going to talk about is S&P 500. So let's check S&P 500. What's it doing? So what's it doing? Let's see. Um, let's use CMC markets. Okay, let's try this. So on DXY, it was a little bit trickish and kind of confusing. Not confusing, but it's not clear to me. So I was expecting the market to do its thing. You see, after this major move, this major move to the upside, market was just resting. So you see that market come down to mitigate somewhere around here and continue based on higher time frame, or market just consolidate a little bit, then continue consolidate like this, then continue his move. So I consider all this as a consolidation. So but in terms of my trading plan and in terms of the approach, so how are we going to back it? This is the last liquidity point that the market swept, and then we broke this structure to the upside. So it means that this low must be taken out and must be protected. So now look at it. When market came to this low, the first attempt candle swept this low. The second attempt candle, before we can confirm this as a change of character, this candle, the second candle was close below the first candle to confirm it. But you can see the first candle came, it's still inside the wick of the second candle came and it's still inside the wick of the first candle. So and the third candle too did its own sweep. So These are hot sweep. It's not a confirmed change of character for me, according to my trading plan, because there is no candle close below that level. So until we had a candle close below it, that's when I can say. So, and as it is now, you can see immediately market start giving us a buying momentum. And if you want to look at it, you can see market creates high, creates low, creates high by sweeping this, and this can also serve as low because it's not as deep as it's still at the same range, or maybe a liquidity a sweep of this low. So market is so anything can happen. Maybe market will continue doing stay to the upside. So I was trying to engage in this market. I think I had one breaking one in loss. So and since then I just ignore what this market was doing. So there's nothing for me on DXY because market is not clear. It's just kind of ranging in my sights. So on DXY I don't have anything to do with it. Before I can do it, I want to see the intent of this market to the upside. Then we can now start operating the way we are operating before. So I think that's it for this video. If there are any pair that I need to talk about, a lot of people trade gold. Let me check XAUUSD. Um, Let me check it. So a lot of people trade gold. So if you see it, you can see if you're looking at gold based on our system, this is just the break of structure that the gold had. And after that break of structure, gold has been rallying. And if you can mark the break of structure, why is it confirmed? Because we had liquidity here that the market took out. So this serves as our liquidity point, and market mitigates this other block that is valid with fair value gap. And you can see if you are to buy this trade from this level, you will have just been making money. You will have make a lot of crazy money. So just by following your concept, the same concept. So systematically, this low must be protected for gold before gold can continue to go up. So, and if this low get violated, then it means gold will be looking for will be confirming sell momentum for us. And in this case, where is our inducement for this move? So I can see this is the inducement, and as you can see, when market swept this inducement, market mitigate this other block, and market rejected, but the momentum was not enough to continue the buy, and market came back. So after that, we only left with probably a stream order block, maybe somewhere around here. So maybe somewhere around here, and it looked invalidated already in my own site. So it looked invalidated like this. Yes, it looks invalidated already. So market has taken it out. The only thing we had here is either market swept this low, or market just gave us more pullback to the upside. But this structure is still intact. It's just like our other blocks has been invalidated. So let's see what this market is actually doing in 4 hours. In case maybe it's giving us a 4 hours intent. So if we are to look, because at this level now we are not supposed to be looking for sell, we're supposed to be looking for buy. So this is the last break of structure that the market did. It swept this low again, then change this character. After change of this character, use this as a liquidity point, and if you try to buy here, you will have made some money. So this is what the 4 hour time frame is currently doing. So we are expecting the market to take out this high. So this reaction came from this other block, and all the market is doing now is to create a internal structure, build up liquidity before it goes up. And if that fails, then it means that this level fails again like this, then maybe market will sweep this low, then we'll start looking for the same setup. But currently, this is what I'm anticipating on gold. I'm anticipating temporary buy because 4 hours have started giving me that confirmation. So as you can see, when market mitigate this level, internal structure, it also took out this level to use this as an inducement, maybe mitigate this level. As you can see, market is still buying. Immediately it did that again. It's trying to struggle with this high, but it swept it. Maybe you want to use this as a liquidity point again. All these are internal. Then before you can continue getting its momentum, but all these are internal. What matter is market has mitigated your point here. Just buy from here, then put your entry here. Forget about what the noise again. Just target your TP to this level. All these are just internal structure, and it will get you confused. Once you understand your own major move in the market, what you are looking for, the the internal noise will not really bother you. This is just your setup. So you can hold it for a while. You can take time before the market gets to your whatever your TP. And if you are scared, you can break even and probably allow the market to do its thing. So that's it for DXY, and that's it for sorry, XA gold, XAUUSD. And it's not that difficult. It's just that you need to master it, and then I'll stay to your principles and your trading plan. So there's nothing to look out for. I've been doing this for some years now, and I've been gaining a lot of confidence in whatever I'm doing. So I don't let any other things to distract me. So I just stick to it and try to get better day by day. And it has been very, very successful. So if you find value in what I'm doing, if you find value in this video, if you have any question, you can drop it in the comment section. If you think any other person would like to see to watch this video to learn from, you can share it with them. So I think that's it. Then if you want me to do video, or if you have questions that you want me to just do video on, drop it in the comment section. If you are not clear enough, I will do video on this and make it a little bit more clearer as much as I can. So bye for now. See you in another video. Bye.